Administration officials telling our own Steve Liesman they have doubled their estimate of the negative economic impact of the shutdown. He joins us now with more. Hey, Steve.
Morgan, good morning. The Trump administration now estimates the shutdown will subtract 0.1 percentage points from the economy every week. And that's every week the 800,000 government workers are on furlough. The previous estimate was that same amount, 0.1 percentage points, but every 2 weeks. The increased estimate comes from incorporating more effects from private contractors who will also be out of work and a greater impact from the loss of other government functions. So the administration now sees a half a point coming off of first quarter GDP if the shutdown lasts through January. Contrast that with Mark Zandi from Moody's Analytics. In a research report yesterday, he estimates a less severe impact, a half point cut to GDP if the shutdown lasts through March. But here's another one. Ian Shepardson from Pantheon, it's worse. He thinks it could cause GDP to go negative in the first quarter, in part because the first quarter tends to be seasonally weaker than the other three anyway. Some of the losses could be recovered next quarter when back pay is remitted to workers. So ironically, economists will lack at least some of the data that might tell them how much the shutdown is impacting the economy because several economic indicators are not being published. The December retail sales report, that includes the critical Christmas sales season, will not come out Wednesday. We'll also likely not get inventory data, durable goods, and home sales reports. That makes it highly unlikely that we're going to get the fourth quarter GDP report, which is supposed to come out January 30th, which, by the way, is day 2 of the Fed's January meeting. Now, a BEA official could not say when or whether that GDP report will be issued. The negative effects from the shutdown, you got the list. Just add to other worries: trade tensions, global economic weakness, and the waning effects of tax stimulus. So, John, not looking good for Q1 GDP here.
Yes, Steve, we had a couple of guests on yesterday who were shrugging off the impact of the shutdown. I was asking how long before it really starts to hit markets. It seems like investors continue to look on the bright side on this based on that whole range of possible outcomes you named.
Yeah, I think that's right. It's a question as to whether it lasts very long. There's two things that have happened. Some economists have worsened their estimate because they think it's going to be longer. And then what the administration doing is saying the effects are actually deeper. So if you have those two things, a deeper effect as well as a longer effect, it could get serious, and we'll see when or if the markets decide to focus in on this.